Gentlemen, we're now through the first quarter, which was pretty much a total train wreck as far as the dry bulk market was concerned. We spent last year getting a bit more optimistic. Ralph told us earlier about how that optimism has disappeared. And overall, 2018 wasn't a bad year. Are we back to square one, or is this just a minor speed bump which will temper enthusiasm to pour money back into the market? And was this just a Cape-sized series, as we discussed, black swan moments, and then Chinese coal imports, and various weather-related incidents, or is this something more fundamental? And will there be any degree of optimism returning this year?
No, I don't see this year as being any better than what we have seen. In fact, probably in the second quarter things get worse before it gets better, because in Q1, Vale was able to replace some of the production they lost from storage. And so we haven't seen a huge decline in imports into China as yet. And I think that will filter through in Q2. I think as it is, dry bulk was slowing down. I mean, you could see that in Q4, we could not sustain the rates that we saw on Capes in Q3. So there were already signs that China was slowing down. Iron ore imports into China went down 1% last year. I mean, it's the first time in many, many years that imports actually went down. There was some replacement overall. Imports did increase because of India and elsewhere, but China accounts for 70% of iron ore imports. So if China is slowing down, the iron ore market is it's tough, and it accounts for a major portion, almost 80% of the Cape-size market. And then on the coal side, the imports are the trade is still increasing, surprisingly, steam and coking. But how long that will go on for, I think structurally, coal is being replaced by gas in terms of power stations. So I think for this year, I do not see how we see a recovery which is meaningful. But for 2020, I'm quite optimistic that given the reduction, like some slow steaming, taking out of capacity because of the scrubber fitting, etc., we may see a bump up and maybe even demand improves a bit.
Martyn, smaller ships, better prospects?
A little more optimistic, yes. I think we are seeing a disconnect between the Capes and the smaller ships. People always argue that the Capes are crushed, everything else crushes accordingly. Now that was the case 10, 15, 20 years ago, where the average Cape was 120,000. Now with Capes at 180 plus or 200 plus, it is a slightly different market. I am more optimistic purely this time around because the supply side, there are no new ships coming. Last year we saw fleet growth of 2.3%. On the Handers and Supramaxes between 23 and 27% cancellation. It's not slippage, it's cancellation. I think we're going to get something similar this year. On the smaller sizes, there's no doubt that the trade war had a massive impact. It has no effect on the Capes. But 8-9 million tonnes of soybean, it doesn't sound much. To a Panamax market downwards, not coming out of the States, is huge. Coal on the smaller size is interesting with what's happening in Australia with the Five Eyes, China penalising. Of course, Indonesian coal has gone up, which again goes back down to Panamax and Supras. And I was actually on a panel this morning, and the figures are there. When you think that Indonesia exported 428 million tonnes of coal last year, of which 71 million went into Southeast Asia. Thailand was close on 25 million, Vietnam 22 million, up 8 million. So on the smaller size, I don't think coal's going anywhere. But we need to get this trade war sorted out. We need Trump to do this best ever deal. I think sentiment will change. But it's interesting, it's keeping us all sober. So in some ways, it's quite pleasant, because what could go wrong? And we've seen that now. So it does stop people ordering. And I think the previous panel, you're going to order ships. What are we going to order? Is it gas? Is it hydrogen? So it is positive, it's keeping a cap on things. But